Welcome to another 52-week low video. These three stocks are at 52 weeks lows. One we did just 2 months ago, and it's already down 13.5% since then. It is Lululemon. Mo, have you stopped buying Lululemon? Is that why the stock is down 13.5% in the last 2 months?
Yep.
It's incredible. We recorded this video on May 21st. It was released sometime in June. And since then, the stock is down an extra 13.5%. Guys, Lululemon's an incredible brand, and it's down a ton. So let's check it out here. We got a $36 billion market cap and basically a $36 billion enterprise value. What does that mean? Basically no debt. This is a great balance sheet right here. You've got free cash flow last year, $1.7 billion versus 1.6 of net income. But the 5-year average free cash flow is a little bit, it's actually pretty substantially lower than the 5-year net income, but that's okay. Look at these returns on invested capital, Mo.
Really good.
And we did a video recently with Marjorie Taylor Greene has been buying Lulu lately. No idea why.
Probably the ROIC.
If Marjorie Taylor Greene can explain to me what ROIC is, I will donate $500,000 to her PAC. Just kidding. I will not do that. All right. Profit margin actually up in the last year versus the 5-year average. Yeah. Got a great gross margin. They manufacture their products. Huge. Look at this growth rate, Mo.
I know.
10-year revenue growth, 19.7. It's gotten better.
I know. It's crazy.
It's gotten better.
It's crazy.
5 years, 23.5. 3 years, 25.5.
I think it'd go the other way at some point.
If I had told you, when was this all-time high?
That was just in December of 2023.
$516 a
Isn't
share.
That crazy?
It's down 45%. What's that number? 45%?
Lululemon.
Lulu freaking Lemon, a company with a great balance sheet, a company with amazing brand awareness, a company that you literally have women out there who will murder their husbands in order to get free Lululemon for 2 years. I'm just saying, I'm not saying I know anybody who's done that. I'm just telling you that my guess is...
Sounded a little bit niche.
I think Mo's fiance was doing that.
Probably.
But I look at this going... This is proof that when something shifts in a company, a great company can see a shift in the stock price because people's sentiment changes. And it can happen very quickly.
And the interesting thing about this, there's no like negativity out there about the brand. It's just shifting.
Yeah, it's not like they have some...
like there's news or something.
Yeah, incredible. Okay, so let's see what the 8 pillars tells us. What's the story on the 8 pillars here? Guys, we got 6 check marks and 2 X's. So let's go over the check marks first. Amazing ROIC. Slightly shares declining, guys. We want them to buy back cheap shares. If this stock fell by 80% tomorrow additional, they better be spending every dollar of cash flow buying back their shares. Cash flow growth, net income growth. They actually have more cash flow growth than net income growth in the last 5 years. This low debt level we talked about. Guys, to me, the story here I'm reading is one thing and one thing only. Is it cheap enough? And is the company going away?
Company's not going away.
You don't think so?
No. Do you?
Brands can be fickle. I'm not saying they're going away.
Oh, okay.
I don't think so. But brands can be fickle.
Of course.
Right? Now, this gets cheap enough. Who buys them? What if Nike decided? Yeah. What if Nike said, you know what? We're going to buy this company if it gets cheap enough. These are the things that as a publicly traded company, you have to be aware of, that if you get cheap enough, people will want to acquire you, especially with this great balance sheet. Mm-hmm. So to me, this is the story. The story is this company going out of business, and is it cheap enough today? Because they've had a lot of growth in the last 5 years. So these numbers, I think, are a little skewed and unfair to them. I don't think these numbers are fair to them. I don't think this tells the true story of the company because they've been growing so stinking fast. Mo, what are the analysts saying?
They're supposed to double their EPS by January of 2029. That's crazy.
Oh boy, this is getting juicy. 13.5% drop in 2 months. This sounds like a Paul Gabriel kind of sale.
And then if you look March of 2024, 9.8 billion to 16.24 billion January of 2029.
All right, still double-digit growth pretty much all the way across. All right, so let's go pull up our stock analyzer tool. Mo, why don't you take an assessment on what I did the last time we remember? This doesn't include the balance sheet. Mm-hmm. I did 5, 8, 11% revenue growth the next 10 years.
I like it.
Do you?
Yeah.
Good. I did 12, 14, and 16% profit margin.
I put 13, 15, and 17.
I don't disagree with you.
Yeah, I think it should be a little bit higher.
But I'm going to keep mine.
Okay.
You're going to keep, you think it should be higher?
I do.
Okay. By the way, it makes sense because high gross margin, almost 60%. If they want to sell 5 more pairs of pants, they probably don't have to do much more to do that, take on any extra overhead. Right? So brand awareness and et cetera. Okay. Free cash flow margin, I kept it the same.
Yeah, I did the same with my numbers.
Right?
PE,
15, 18, 21.
Okay, I did 17, 20, and 23.
Okay. I'm not gonna lie to you. It's probably because, like, I saw what happened with Canada Goose. Canada Goose.
They were in 2019, 20. They were booming.
And now it's like, listen, I still like Canada Goose
They're
a
great,
ton.
but it's not the same as it was.
And I did my 9% desired return. Guys, this is basically the market return. This is only for intrinsic value. This has no margin of safety, but you need to put margin of safety when buying individual stocks. Absolutely important because we don't know the future and we're humans and we make mistakes. And 9 or 10% what the market's going to get. So if you want that, just buy an ETF. If you want an individual company, put that margin of safety in. I hit the analyze button. I have a low price, 166, high price of 436, middle price of 270, Mo. I did put my watch list at 200. I'm probably being too aggressive there, but
Getting interesting.
yeah, it's getting interesting.
My watch list price is 280.
Oh, I thought your watch list price would be 500.
No,
No? Okay.
it already hit that.
Thank you. Stock number 2, American Airlines. Guys, look at this chart for American Airlines.
It's crazy.
All-time high, January 16th, 2018, of $59 per share. It is currently at $10.63 per share. Mo, can you look up something for me?
Sure.
Can you look up how many times has American Airlines gone bankrupt in its history?
Sure.
Guys, it's hard for me to get around airlines. They're just a tough business with all the unions and the this and the that and the blah, 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 blah. Southwest, full disclosure, I own. Don't go buy it because I own it or anybody else on the internet owns it. I'm here to teach a process. Let me show you how tough they can be. Market cap, $7 billion. Mo, what's the enterprise value? Did you look?
Oh, no, I didn't look. I don't know.
$7 billion. What's the enterprise value?
35?
Close.
Really?
$70 billion.
Wasn't even close.
$69 billion.
Oh, my God.
It's opposite day.
Wow.
Guys, this difference right here. And guess what? The good news is they have monster cash flow. Oh, wait. No, they don't. Negative cash flow last year, negative 5-year free cash flow. Oh, God.
2011, they filed for bankruptcy. It's only been once.
Only once in history?
Yeah, so they're
in history.
Yeah, killing it.
Let's look at analysts are saying, because here's what the 8 pillars are telling you. Oh, I'm actually surprised it's only 5 X's. Revenue growth, profit growth, net income growth. Well, when you went from losing money to losing less money, it's easy to have income growth.
Look at the max chart, down 56.75%. This is unbelievable.
Oh, jeez.
But when you have monopoly, I mean,
yeah, if you have monopoly, you make a lot of money, though.
Yeah,
but you make a lot of money when you have monopoly.
Yes, but you can also stick around, I guess. There's no competition.
All right. I'm not even going to do stock analyzer tool because
I don't know what you can do.
For me, guys,
you're making insane assumptions that you have no idea about.
Yeah, I just don't like it. And I look at this and I think to myself, you know, we created the software and we created this community to have this engagement. The community has thousands of members in there. We have the software purely to be able to sit there and analyze companies, but it's garbage in, garbage out. I don't know what to put in here in our stock analyzer tool that would make it worth it. That's the problem. Guys, you have noticed, I don't know if you've clicked on the link in the description below, we have limited number of daily spots for Everything Money community and software. And the reason for that is because the software, as it is right now, includes everything we have to offer to analyze stocks, real estate, retirement. Everything here is the software. Now, behind the scenes, we are making some changes. And in the near future, that current offer of everything involved is going away. As we've been getting feedback from our community members, people have expressed they want us to focus on specific niche areas of the Everything Money tools that apply to them at that moment in time. They don't want to get the Cheesecake Factory of way too many options, and we don't want to be that for them. So if you've been watching the channel, you'll probably remember that when I built this software, I built it for myself. It was all selfishly for me so that I could use it to make better decisions for stocks and real estate and even retirement, even though I do not plan on retiring. But as the channel's grown and our community has grown, it has to become less about me and more about how I can better serve you and the community members. Now, the good news is we have not made any of those changes yet. They're still being worked on behind closed doors. But if you join today, you will be grandfathered in for life with all of these tools at today's price. That price will not go up. I'm telling you this now because there's still time for you to sign up. And as long as you join the EM community today, before the changes are made, you will be able to keep all of the tools, even after we make the changes. So click on the link in the description below. It'll be the best decision you've made all year. And this is the best offer we have made to date. Now, American Airlines here. I think it's funny that analysts even have them making money for the next 5 years.
What are they basing that off?
I don't
Hopes and
know.
Dreams?
I don't know. Listen, more power to anybody. I just look at that balance sheet. I'm just like, I'm staying away from that company. Final stock. Guys, I want you to all ask your lady friends, what is Estee Lauder? And I'm sure you've walked the mall with your lady friend. Maybe you're buying it for yourself, but they do makeup. Big fall from their all-time high. January 3rd, 2022, they hit $375 per share. I believe that was the peak of the bull market back then, before it had the bear. Now they're at $96 a share. Guys, if you don't know Estee Lauder, they've been around for 76 years. They're older than my father. Older than my father. What were some of the brands that you said they have?
Clinique, MAC, M-A-C, La Mer.
Oh, MAC, yeah.
Yeah. Joe Malone, London, Aveda.
Joe Malone.
Yeah.
Aveda. They have Aveda?
Origins.
Wow.
And Bobby Brown.
Now, I'm not being funny here when I say this. Mo is big on how he applies facial makeup and other things to his face. Yeah, you're quite weird about this, aren't you?
I am.
Yeah, you apply like I think it's a thing for women. I never knew this that they apply sunscreen to their face like all the time. Like a lot of their makeup you do the same thing?
Every day.
Every day.
Every single day.
Every single day.
I probably have 5 products that I put on my face every day.
What are they?
C&E Ferulic. It's like vitamin C. There's something that hydrates. There's, of course, the SPF 50.
50?
Yeah, I would go higher if I could find higher.
First off, you can easily find higher.
But if I play, from SkinCeuticals, but if I play golf, I put on like 70. But it's like,
I heard that anything above 35 doesn't really matter.
Yeah, I don't know. I just do it.
All right, we moved on. I'm sorry. Sorry for everybody for wasting their time. $35 billion market cap, $47 billion enterprise value. Mo, we got a little bit of a problem here. Look at this free cash flow last year. Why don't you check out the cash flow statement and see if you can find out why.
Okay.
Look at this profit margin. 5-year average, 9.8. 1 year, 4.2. Okay. It's already telling me a story. Very low revenue growth. But look at this gross margin, 71%. They pay a dividend. How do they afford that dividend? I have no idea.
No idea. I was looking at that.
I'm actually surprised this return on invested capital is even that high. 5 years is 17%. I'm actually surprised by that.
Their capital expenditures in the last year have jumped.
Okay, good.
Huge.
Now that's what we need to find out, why that is. Yeah. That's really important. If you're in our community, ask that question if this company is intriguing to you, because they might be investing in some sort of growth, which could be big for the company. I like to hear that. I was worried it was going to be some working capital manipulation and something like that. But the capital expenditures, like Amazon's capital expenditures like doubled 2 years ago. It's like $60 billion. Amazon is the king of reinvesting in the future for the future.
This could be AI.
You just want to say AI.
I just want to say.
The stock has been public. Our data shows back to 1995. It's only up 1,000% since 1995, not including dividends. Okay. So what are the 8 pillars? Oh, wow, 6 X's. Do you see this?
Analyst estimates. I thought that's where you're going. Do this first. 6 X's?
Okay, this is barely an X here.
This is what's interesting, though, is we didn't expect that.
Yeah, revenue is basically flat.
I feel like something's going on here.
A lot of debt here. Well, it's obviously... Okay, let's see what analysts are saying.
Wait till you see this.
Oh, my lordy.
Yeah.
$2.30 growing to $9.06 in the next 5 or 6 years. 5 years. Wowza. Revenue growth, man, a lot better than they've been doing lately. Maybe they know something we don't know. All right, let's run the stock analyzer tool. Have I ever done Estee Lauder? Yes.
Oh, my God, I did it.
November 15th, 2023.
Yeah, there it is.
Okay. I did 2, 3.5, and 5% revenue growth.
Okay.
What'd you do?
I did 2, 4, and 6.
Okay. Profit margin, 9, 10, 11.
I did 8, 9, and 10.
I did 8, 9, and 10 for the free cash flow because it seems to be lagging just a smidge in the last 5 years.
Right.
Well, actually a lot last year. PE, I did 13, 16, and 19.
I did 12, 14, and 16.
Okay, now I did my desired return back then. That was higher. But let's do the 9% to get intrinsic value here. I hit the analyze button. And guys, don't forget, click the link in the description below to sign up for our community before we make the changes so you get locked in. I have a low price of 45 to 50, high price of 87 to 96, middle price of 60 to 70. I have my watch list at $60 per share. If you'd like to watch our last 52-week low video, click this next link. Thank you very much for your time.